Welcome to today's live stream. Let's dive right into it, shall we? Oh, goodness gracious. What a nice and predictable chart we've had. Very happy to say that. Let's record this. I would like to install these updates tomorrow, he said for the 100th time. Alright, let's do it. Alright, so a few streams back, we predicted that because we had high potential energy, we would see a period of increased volatility with a slight downward slope because of both the weighting of the CCI and the apparent downward expansion of the lower TFs. So, with that in mind, we have had a nice little trickle to the downside, and on those macro time frames, it's looking to be a very clean chart with successive lower highs repeatedly with the same basic low. So when you get this obvious of a chart, everybody's probably drawing your favorite breakout structure. You guessed it, the descending wedge. So if we have repeated lower lows on a super obvious trend line, and you also have a swing low of a super obvious trend line, pretty much Bitcoin is inclined to do the following. So whenever you get something this obvious with significantly reducing volume and significantly reducing volatility, typically what happens is you would have significant downside before any kind of upward move, both to acquire liquidity and to fake out the masses, right? Bitcoin is highly manipulated, especially during uptrends, and I think I can prove that pretty clearly just by pulling up previous price action. Beautiful. So we are using the 500 period as our baseline support. The 1.25 standard deviation, because historically it has held the bullish trends very well, and lo and behold, it's doing the exact same thing right now. With that in mind, let's go ahead and take a look at previous price action, because that is the priority. Honestly, I believe that is what is creating all this ridiculous price action. So, whenever Bitcoin, well, maybe not. Because if we were to do a side-by-side comparison of these two charts, of the previous trend and the current trend, we would make the following assumptions. Alright, well, first of all, we should just immediately compare crash patterns and their price action. Awesome. So what do we see? We see a significant trend followed by a period of downward move followed by a final spike, local bottom. All right, so significant upward trend, downward slope, final spike, significant bottom. And then there's the upward move, the initial upward move followed by a long compressionary period. The initial upward move followed by a long compressionary period. So then we can even do this. So let's stop sinking symbol. And I'm just going to load up XAU USDG. And we're going to switch this to the monthly. And we're going to put this guy on the weekly. Nice. I would almost think that these are the same chart. Goodness. How similar. So what do we see? Awesome. So I'm gonna put this guy on the 2 week. Nope, it's the exact opposite of what I wanted. I put this on the monthly, and we're going to put this one on the 2 week. Or 4 day? Yeah. Really, I just want the candles to be roughly the same length. So, Here we get significant trend, followed by a compressionary period, followed by a compressionary period, followed by a nice scooping bottom, scoop, with an initial boost upward, compressionary period, initial boost upward, compressionary period, second leg upward, compressionary period, second leg upward, compressionary period. And then we are getting initial test downward before trend continuation. That's what I think is happening here. Initial test downward before trend continuation. That would be really nice. So one important thing to note with the gold chart is with the relative swing high of the previous flag, right? Price was testing the bottom of that same relative flag. Okay, so get this. With the previous compressionary period, price action ran down, tested the previous flag before trend continuation. And lo and behold, we have that same compressionary period. The price runs down, tests it, and then hopefully sees trend continuation. So that's another perspective. And I think you'll like this, is actual retracement values. Just how far these have gone. Okay, so what we're going to look at is just a Fibonacci retracement. And I'm just using this to show you the ratios. Lovely. So this is pretty aesthetic. Compressionary period before the final dump happens right below the 0.236. Same location each time. Very nice. Then we have significant run up. The first flag forms between the 0.382 and 0.382. Now, in fact, the gold uptrend, actually, by looking at this, we get a different perspective. Because we could consider this compressionary period here the same as this compressionary period here, because it's the same area of retracement and the compressionary structure is far more similar in those two examples. So I'm going to lock this drawing and this drawing, and then we're going to trash. Okay, well that didn't work. But anyway, just by looking at retracement values, it does paint the picture that this structure here would more similarly parallel this structure here. So maybe it is possible to just get that sizable upward break. Well, the best recommendation I can make is not to over leverage on this scenario. Just try to catch the swing low, and if we do break out, well, it'll be provided with opportunity for entry. I would like to see some significant upside here. And let's actually switch both of these to lower time frames, shall we? Thankfully it preserved my circles. Very nice. Yeah. previously. Gold's flag was a lot more parallel than Bitcoin's, whereas Bitcoin seems to have a bit more of a downward slope. Or we could drop from there. Yeah, that works. And there's also this trend line here. Oh, wow. Maybe this is the exact bottom for Bitcoin. Wouldn't that be cool? For the next 2 years. Like today. I mean, there's a pretty good profit ratio on that. Why not? Right? You know, just unleveraged, you have a 10% downside and your upside's what? 400%? It's pretty safe. All things considered, it's not a bad position. Especially when we're seeing this kind of symmetry. And I don't use Elliott waves, and these are going to be awfully proportioned. But I just want to point out some similarities. And then on this side, we have the initial move up, test, down, test, down, test, up, down, test, down, test. And there's the final dip. There's the final dip. And there's the uptrend. Hey, the profit ratio is there. Might not happen, but who cares? All right, as long as you properly use a stop loss, use a profit ratio. It's hard to ignore, especially when the wave structure is so similar. And yes, the waves are incorrectly drawn. I'm totally aware of that. I'm just pointing out the similarities. That's really interesting. Well, definitely something worth considering. I might be reaching here, and that's fine. It's definitely worth the risk. That's it for today, folks. It has been a pleasure. Who knows, maybe today is the exact bottom for Bitcoin for the next 2 years. You never know. So I'm going to take a small bet on this, because the profit ratio is like 100 to 1. So I love you guys. I'll talk to you tomorrow. Ciao.